16th February 2023, MAO with Cal once again. Now, no wonder the stock market has been going up resiliently, right? Every time the market comes off, the market just comes back up again, and this needs a lot of money. And now I found the reason. Okay, I'll share with you so you understand why some of these guys are on my front page right now, my title. Yes, apparently the central banks have been pumping a lot of money despite the current situation, and of course seemingly either the boys doesn't know it or they know about it but they just happen to sell us the wrong stuff. I'll tell you more in detail, and in fact I'm sharing you right now it's time to short the FTSE. Alright, so FTSE, yeah, I'll tell you more in details. Let's go. Now, disclaimer apply as usual, and make sure you do a risk assessment, and thank you AIMS for the kind sponsorship. Now, first of all, let's recap what happened last night. The Dow Jones recovered and stayed up 38 points, the Nasdaq up by 97 points, and the S&P up by 11 points. Now, Microsoft was down, Apple was up, Google was up, Amazon was up. Okay, so basically everyone was up right away for the tech side, including Tesla. Wow, back up again, 214. Oh, that's fantastic. So many people have been asking, Cal, maybe calling on Tesla to sell, but it's still going up. So what's your take here? Now you must understand, guys, I can't help it if the boys want to push it up, okay? Fundamentally, Tesla shouldn't be this price, okay? I believe that the fair value is between 150 to 165, okay? And if you're talking about if the market go to recession, 130 to 120 perhaps, and if go crazy, you're going to have a flash crash, who knows? We can see even 95. But the thing is this, even Charlie Mungo also came in that that's really very incredible to be seeing Tesla at this price right now because BYD is doing much better than them. Alright, so I'll tell you more in detail shortly. So stocks closed slightly higher. Nasdaq notches 3-day win streak. Oh, okay, as the investors weigh retail sales and the inflation data. Alright, so basically we saw the January retail sales rose by 3%, which is very, very high because the economies polled by the Dow Jones, right, anticipated only a 1.9% increment. So that means again that the US Federal Reserve has a lot of room to actually continue to raise hikes. Alright, to raise the interest rates. Alright, so this is something that This is something that we all understand, and this is going to be crazy because the labor market resilience is the main reason consumers continue to spend, all right? So as long as people are spending, there's no way inflation can be going down, all right? So of course you may say, but Cal, look at it, it's actually going down, right? Well, I told you guys, if you actually watched my MAO yesterday, it was covered. And then I mentioned to you, mathematically, we should be at 6 and 7 for the CPI. But of course, again, you know, after the revision of the calculation, things have changed a little bit. So I leave it to you to decide. But because we all know the prices in US is going up, so think about this. So now with these numbers going up, it is very clear that it is very difficult for Federal Reserve not to do things, all right? They will have to increase interest rate further. And of course, the 3/4 of the S&P companies have posted their latest result, and 69% have beaten earning expectation, which is good. But do note, okay? The thing is this, the beat rate is below the 3-year average of 79%, and their earnings expectation was really revised downwards. So guys, wake up guys, something is not right. But of course, when you have so much money in the market, you can't go down. The market just push all the way up, as you can see over here as well. So of course, if the market is full with money, it's going to be damn difficult to bring it down, right? So let's see the retail sales, right? The retail sales jumped by most in nearly 2 years in broad gain, okay? And you can see right here is how it was down actually in December and November, and suddenly it just go up, all right, out of nowhere. So again, it was because of something that happened because of the 13 categories all went up due to the motor vehicles, furnitures, and restaurant. So that is the main reason why you have this down numbers. But of course, some people say that this number may not stay because it's a one-off thing. It's a Christmas period. It was a New Year period. So that is a reason. But of course, if this retail sales is so high, that means that the Federal Reserve can continue to raise interest rate. So let's watch the video on this retail sale and see what was all about, right? Let's take a look.
Important because we knew auto sales were very big in January, and that would add a lot. So we've got some beyond auto sales there. Take out gasoline as well, 2.6%. So it looks like Americans were happy to spend some money this past month. The control group, which economists follow because that's what goes into the GDP report, up 1.7%. That was after a negative 0.7 print in the initial report last month. So it looks like some very strong numbers here in terms of retail sales. Americans out there spending some money.
All right, so people are really spending money. So again, you may say, Cal, if that's the case, where is the recession then? Exactly my point. So if these people are spending money, it's going to be difficult to have recession, right? No, it is possible. Because if these people are spending things that they don't have, which is credit, then of course it's just a matter of time things will go very wrong. Charlie Mungo came out and talked about Tesla and says that BYD is so far ahead of Tesla in China, it's almost ridiculous. Wow, that's a very, very strong statement from Charlie Mungo. He says that, right, the current Tesla sales, right, pales in comparison, okay, in China, calling the Chinese electric vehicle his favorite stock ever. Now, of course, think about this right now. The Berkshire Hathaway now, this investment is already worth $8 to $9 billion. And you know what? This stock has climbed 600% in the past 10 years. So obviously this is good. But take note, yeah, Berkshire is actually trimming its BYD stake the past year because apparently it's going to be pricey, right? This is fair. And of course, Berkshire is basically a fund company. If they think it's too much, they will reduce. That is the smart thing to do. So in short, it's all right. He feels that the CEO, Wang Chuanfu, is an unusual, and call him a genius and a workaholic. And of course, at the moment now, BYD has made more than $2 billion after taxes in the auto business in China. That is really incredible. $2 billion. That's a lot of money. And in fact, he rubbed it in and says that what Elon Musk achieved in the car business was a minor miracle. I don't buy him and I don't short him. Pretty smart. Okay. All right, so the thing is this, let me now go to China first, okay? Apparently now the elderly is protesting, all right? I heard this from my wife actually, and indeed it's happening right now. Now, China, Wuhan is where the whole pandemic actually happened, right? We all know that, whether it's really from there, I mean, in a way itself, it's a little bit question mark, but indeed, the world buying on it, and now the thing is this, in fact, after what happened in Wuhan, so you think after so many years of being locked down and stuff like that, would that not cause any problem? It does. So apparently now there's a protest broke out in the central China, Wuhan. Apparently elderly residents shows their discontent with the local government reform to public health insurance that came in effect early this year. So in short itself, they reduced the insurance, alright, the health insurance, and this is not a good sign because that means that probably the government is running out of money. So we all know that China had recorded one of the worst economic performance in decades in 2022 because of the pandemic. And of course, that was drained their budgets. And because of all these things, right, they create a problem. All right. So yesterday, around this last week, I think, all right, there is a great protest to a lot of people, all right, because they are very unhappy at what's happening right now. So let me just show you the video that it happened. All right, so you can see that again. It's basically supposedly there's supposed to be like the 371 yuan coming in, but now it's slashed down to only 196. That is a lot of reduction. So 1 year itself, normally you have about 2,354 yuan. But now it has reduced by 2,100. All right, that's a lot of money. So why? Obviously, it's like a feeling your belly safe is being cut down. You're given this, but you're being cut, right? So apparently, there's a lot of social media covering that hundreds of retirees, okay, scuffling with the police in Wuhan in central China. Let me bring you the video right now. I have it for you. This is really not a good sign, and this is another reason why I feel that there's a lot of problem coming out for the whole world. You can see that they are really protesting, really very unhappy. Really, I mean, think about this. They have been saving and putting money into these accounts, and the money just now gone like that. Of course, get unhappy. And obviously now with the medical need, right, where you can see so many people falling sick, they really need this, and this is bad, all right. And of course, after the abandoning of the zero COVID policy, this even make things worse. So you can see that it's really bad right now happening in China, all right. So once again, guys, this is a clear indication of global recession coming in. But again, like I say, if the central banks are pushing and shoring with money, you can't see it from the stock market. You just see it for yourself. Now, US is one problem. UK is a bigger problem, in fact. UK inflation dips but stays above 10%. Nothing about this. What's so big deal to tell me that it dropped from 11.1 to 10%? Yeah, I know it fell for the third month in a row, but it's still at 10%. That is very high. So think about this right now. The thing is this, take note, yeah? The UK inflation fell for the third month in a row in January to hit 10.1%, okay? Take note, but high food and energy prices continue to put pressure on the British household. Now, do note, this is very critical because imagine if the food prices again goes up, all right, scarcity become a problem. And then after that, the energy prices like crude oil goes higher. Now, I'm predicting that crude oil will go up. Now, I've been saying this for quite a while. I know that not many people agree with me. But the thing is this, the current crude oil price right now, as we know, is about $77, right? I believe that we will see 103 by probably this year, okay? So think about this. Imagine if crude oil price go to 103. Oh my goodness, how high would the CPI data go? So the thing is this, if you look at the core CPI, which doesn't include the food and energy, all right, it's 5.3% compared to the 5.8 in December. So that is where we would like it. Hey, wow, pretty good, right? But think about this. This is not going to be like permanent. In fact, we all know that the food, the non-alcoholic prices are all going up. Even shelter is going up. So all these tells you that this is not going to be good. And the worst thing is this, the worker pay continue to lag behind inflation. So which means that people are not able to compensate the current inflation rate right now. And this is really bad. And of course, the Federal Reserve have increased interest rates. So the Bank of England will also have to do that. So they increased by 50 basis points on February 2nd. And they do forecast a much shallower recession than the previously fear, which obviously I don't think it will happen because I think that the recession will be bad, okay? So the central bank now says that they are looking at the main rate to go to 4% and anticipate that the CPI inflation will fall to 4% by the end of 2023. Do you think so? Come on, man. This is very, very impossible. So look at the UK interest rate right now. It's doing at 4%. And of course, if the Federal Reserve need to go higher, this will go higher. And this will hit the 5% mark. And when it hit the 5% mark, this was here. That was in 2007. That was where the Lehman crisis, and that was near the time whereby thing was prosperous, thing were good. And then what happened? Lehman crisis happened. The UK had to cut interest rate to save the day. So what do you think will happen soon? And I tell you this, guys, deja vu. It will actually happen once again. So now the thing is this, I can see on the mainstream media now, they're covering it. They say that the UK interest rate are too high and need to cut. Are you kidding me? How can you cut interest rate when you have inflation at 10%? I can't see that. And from Bloomberg, BOE brings peak UK rate into view with a hike to 4%. So all these are data last 2 weeks ago, yeah? So to me, it's impossible, guys. Let's wake up, okay? It's really incredible. So now, if you look at it, the UK, the FTSE index right now, right? I think that it's a good time to sell. Why? Because this is a very technical thingy. This is point A and this is point B. And if you do extension, this is point C. This is a very good extended technical. I believe that this is where it will come back down. So I'm giving my view right here. Now the FTSE is trading about 8,000, right? I believe FTSE will come down all the way to 7,800 in the near term. And of course, if the stock market in US goes down further, then of course it is possible for the UK or the FTSE, all right, to come down to about 7,400 to 7,500 area. So this is pure technical because in my opinion, we are really at a very overbought situation. Of course, it's bullish, but I think it's time to take some profit. 8,000, come on, man, let's take some profit here. So the thing is this right now, right, the mainstream media is saying that, right, is the UK shares, can UK share keep rising? So apparently they are pretty bullish. They feel that the thing can go higher. So they feel that right now, although it's at 8,000 and everything is good, all right, for some reason, they think that you can continue buy, all right? So what do you think, guys? And this is when the mainstream media say buy, right, and you can see very clearly that it's really overbought. I think it's time to sell, okay? I think it's time to sell. I think it's a good time to take a short position right now. So another reason why I fear that, right, the whole European side could be a problem because Credit Suisse is offering big incentive, okay? They are offering investors a hefty incentive to buy their new Euro bonds. That's just days after announcing a bigger than expected quarterly loss. So in short, they just announced a bigger than expected quarterly loss, and yet they're telling people, like, you know what, buy my bonds and I'll give you a very, very good rate. Of course. So we all know that Credit Suisse has lost about $7.3 billion. All right, think about it, a bank losing $7 billion. So they're going to come out with this type of bonds, something similar. And you want people to buy them for the interest. Now, the interest apparently, or the so-called incentive, is much, much higher than normal. And don't you think that that's very scary? Because like that's how a Ponzi scam is being worked, right? Now, why Credit Suisse got into trouble? Because we know that, well, this guy caused them great pain back then. And of course, this company also. All right, and of course now Credit Suisse was hit with money laundering conviction. This is the first ever criminal conviction on a major Swiss lender. Think about this, a major bank committing laundering, and of course they get fined. So with all this thing happening itself, right, no wonder the share price is like $3 right now. So this is a clear indication that, again, problem is surfacing, all right? Now, before we jump into other market, let's look at the Nikkei right now. Take a look at this Nikkei. Well, you can see the Nikkei is going up very nicely, right? Undeniable. But you look at my indicator, right? The last few days are a bit funny. Yeah? You can see that the boys are selling, then they are buying, but the price is not going up. This is something not very unusual. And of course, now my KRW is showing this. So overall, I feel that it's time to, it's really time to take some profit from the market. Yeah, it's really time to take some profit from the market. Because I feel that, right, this rally is very dangerous. It's a matter of time. We can see the Nikkei coming down back to 26,998. And why is the market going up so strongly from 26,000 all the way to 27,000? Of course, there's a reason. Apparently, right, we all know that the Japan trade deficit has smashed record level, okay, narrowing export amid global recession and of course global slowdown. All right, so smashes record level. The trade deficit smashes record level. This is not a good sign. But the thing is why? Well, apparently, if you look at it right now, because the BOJ is doing a lot of QE. Apparently, this BOJ has pumped in so much money that basically it's really, woo a lot of investors coming in. So when, of course, any central bank do a lot of QE, right, stock market will definitely be going up. So the thing is this right now, let's take a look here. You can see that from the Apollo Chartmaster, okay, it says that, right, the Bank of Japan is buying so many bonds to defend its yield ceiling, the YCC, right, and it's counteracting all the balance sheet shrinkage by the Federal Reserve, the Bank of England, and the ECB. So in short itself, right, Bank of Japan is buying so much bonds so that it can defend its yield ceiling, while the rest of the Federal Reserve, they're all pulling handbrake. So what do you think, guys? So that's the reason why I feel that BOJ is going to be very, very near to a possible problem. If they get too much and the global market just break down, right, it's very clear that BOJ will hike interest rate. And when they do that itself, the whole stock market will go into a chaos, okay? So now the BOJ purchase of JGBs to keep yields low are now bigger than the Federal Reserve QT. That means that while Federal Reserve is doing QT tightening, BOJ is doing a QE. So that's why it's adding a lot of liquidity to the global market. Now you understand why itself is so difficult to see the market going down. Because when you're doing so much printing in the market, what do you expect, right? So all these things tells you that something is not right. They probably know, the central banks know something is very, very ugly, but in order to keep it good, they just keep on printing. And this is really bad. So you look at it right now, right? You can see China market, Japan market is bouncing up, and they have been printing. Yes, indeed, China has been printing, Japan has been printing. So all these is showing that they are really going all out, while other central banks are actually cutting down. But because the printing is more, then definitely why you can see them really total resilient in the market right now. Let me just show it to you how China fight recently. Take a look here. You can see that. This is how the China wave came in from November. Important now, from November itself, the China market went all the way up. But prior to that, right, you take a look, prior to that, the market was all the way down, all the way to November. And very incredibly, from November itself, the stock market in China just go all the way up. And I told you guys this technical point that I mentioned from here point A to point B extended. Look at it, the way the market stopped there. But today, something have changed because today the market actually closed as a BMB and it actually closed below my trend line. So if this is going to continue, the selling can bring all the way down to 13,200 area, right? So something that we will talk about it later. So if that's the case itself, right, take a look at this. That's why we now can see on hindsight why the market is so resilient. Because apparently from November 2022, that was a bottom, and that's where the G6, the Federal Reserve, the ECB, the BOE, the BOJ, the BOC, the BPOC, all came in to hold up the market in November. Hey, wait a minute. November, very familiar, right? Last year, right? So let me tell you why. If you cannot remember or you feel very familiar with this, because that was the same time whereby Morgan Stanley, Mike Wilson came in and said that they were bearish on the earnings, which are absolutely correct. But the problem is, if the central banks are all pumping money, then of course it's going to be difficult to go down. Michael Harnett in November says that let's buy some Chinese stock, which was correct, but they say sell the US market. No, it wasn't right. So the Chinese stock was correct. So it means that they know about it, but yet they actually shorted the US market, which is a bit wrong, right? So Michael Burry also in November says that it's time to do more sizable short selling, all right? So all this tells you that the boys either they doesn't know about this central bank's act, or they know they short us, they sell us the wrong thing, or they really don't know and the central bank just pumped since November and now these boys are being hit. So what do you think, guys? Leave in the comment box, let me know who do you think is correct? Who do you think is actually, do they really know about this or they doesn't know about this? This is going to be very interesting. Now you understand why the stock market is so bullish right now. But the thing is this, I will say again, if that's the case itself, the moment if central banks have to cut their position for whatever reason, then this is going to be very bad, okay? Things will get very, very ugly, all right? So think about this, why the market is going up. And of course now, take a look. I have been telling you guys the US dollar will go up and it's happening right now and I still pretty bullish. I still think at 105 is coming in. And of course, why the market came out recently was because that we all know Japan and China has been reducing the US bonds and treasury. So when they do that itself, that will flush the dollar lower. And I think that look at it right now, based on last December report, they still cut from the, Japan still cut, China still cut, but the numbers is getting much, much lesser. So I feel that this is why the dollar has found the potential here right now. So when these people start to reduce their cutting, right, that will give a lot of reason for the dollar to go higher. And I think 105 is going to come in. So that means that gold prices and some commodity will be hit, all right? So take note of that, yeah? Now, this is the Dow Jones chart from the highest point A and the lowest point recently B, and we do the Fibonacci, and we can see that the Dow Jones is really, really holding 33,800 very strongly. You can see that over the last easily more than 30 days. In fact, the Dow Jones have been just ding dong around this point. So as long as the Dow Jones doesn't go below 33,800, we should see some upside. Now, of course, the upside can go as high as 36,196 level based on the FIBO. But if you ask me, I still think that if the Dow loses 33,800 and it can really go down all the way to here, which is the 32,820 zone. Okay, this is my view on the Dow Jones. So any fundamental to take note of this have. So apparently, this is interesting. Due to the check on the US treasuries, right? This seems that, right, the so-called private sector, they are still very bullish of the equity market. They have been putting more and more money into work. But the official, which is a foreigner side, right, they have been liquefying position. So that explains why that maybe the boys really know things are going to get bad. They liquefy first. But then because of the pushing up and shoring up by the central bank, more of the retailers and the locals think that things is good, let's buy. So what do you think, guys? So for me itself, be careful will be the best thing to do. And I still think that there's a lot of chance of you see a few black swan coming up pretty soon. All right, this is my personal bet. Okay, right, that will be all for the fundamental side. I'll see you on the technical side in the next video. Bye-bye.